Well, good morning, everybody. Welcome to West London Chambers of Commerce International Trade Payments and Debt Recovery webinar. Today, we're going to be covering international and local trade payments. And from an international perspective, we have special guests for our chamber this morning, Alwadi Holdings, coming to you live from Dubai together with our wonderful member, Sonny from B2B. Can you please all turn your cameras on? So it's a bright sunny morning in London today. It feels like a little bit of Dubai weather has finally arrived in our capital, Shukran Jazilan, Ayman. And our Chamber of Commerce specialises in number one, helping local companies grow and thrive in West London, but also number two, helping those local companies around West London grow internationally. And the vast majority of our members are SME companies. The biggest bugbear for SME companies in today's world is the one thing nobody ever talks about, and that is what happens if you supply your product or service and you don't get paid. What do you do about it? If you're a small SME, it's generally very difficult. If you're a big PLC, you've got a big legal team behind you. And a lot of the companies that are members of our chamber who have started their own SME largely used to work for big PLCs and are used to having big back office support behind them, like a legal team. But when you go it alone, you don't have that. So what do you do? What are the options you have around you? From a simple trade perspective, when you're a small company and you buy goods, as a buyer, you tend to either pay cash in advance for something and then the seller sends you the product, a bit like on Alibaba or on Amazon. But when trade gets to be a bit more significant, the buyer wants to see the product before they can sell it, or they want to have some trade finance facility to be able to stock it, sell it, and then with the proceeds pay the supplier, which is how cash flow works in a good company. But when the problems happen and that payment doesn't come through, what do you do? So we are very grateful to have with us today Sonny Chall and Ayman Alwadi. Sonny is from the UK. He's one of our members. He's worked some miracles for our Chamber of Commerce and for some of our directors in helping them with some accurately worded documents that get people to realise there's some meaning and some substance and some teeth behind the letter that can go into a company to get you to be paid. But Sonny's reach isn't around the whole world that I have behind me this morning. So, fortunately for Sonny and fortunately for us, we have friends around the world. And it's friends that you need to help come in behind you that can get on your side and you can help you recover that debt. So, it's with great pleasure that I'm going to hand over to Sonny to start off this discussion this morning and talk about how you can recover your debt as an SME and some of the things you can do to mitigate the circumstances before you end up in a debt recovery situation. Sonny, it's a great pleasure to hand over to you. Thank you.
Hi, good morning, Alan. Thank you so much. It's a great pleasure to be asked to present today, especially with friends like Ayman also in attendance. I just want to say good morning from the UK to everyone that's joining us. Thank you. Hopefully, you'll find this presentation webinar useful. There will be an opportunity to ask questions at the end. So if we can present first, then we'll deal with any questions towards the back end of the webinar. I just before we start, I just need to share my screen. So let's get on to that. There's a presentation. Uh, is that full screen for everyone?
Yes, looks good.
Okay. Um, there we go. Right. Okay. So there's the first slide. So before we get to the practical content, I just briefly wanted to introduce Collect B2B. We're a specialist commercial debt recovery business located in London. Our speciality is recovery of unpaid invoices and overdue accounts. Our team has decades of experience in amicable collections, which means our focus is on resolving matters professionally, commercially, and constructively. We act for, as you said, Alan, large and small businesses, both here in the UK and internationally. That includes companies trading globally and businesses dealing with cross-border customers, suppliers, and debtors. We understand that every unpaid invoice affects cash flow, time, and internal resources. So our approach is to help businesses recover sums owed whilst protecting commercial relationships where possible. I'm one of the founding directors at Collect B2B and also a qualified solicitor here in the UK. That actually gives our clients the benefit of both practical collections experience, but also a legal understanding when matters need to be assessed or escalated. So in today's presentation, it's primarily about commercial debt recovery. The focus is on the UK and GCC. The key message is simple. Strong recovery doesn't begin when an invoice becomes overdue. It's much, much earlier. With the way that the customers are onboarded, the way that the contract is documented, and the way that the evidence is retained. So I'll move on to the first slide. So most businesses are very good at the preparing for delivery. They usually have sales teams who are out there drumming up business. They prepare products, the services, logistics, and the client relationship. But fewer businesses are prepared properly for the much harder question, and that is what happens when an invoice isn't paid. So it's all well and good when things are going fine, your invoices are being paid, but the important question is what's been done at the front end to minimize risk further down the line. This question becomes even more important when it comes to international trade with cross-border businesses. There's an increased collection risk. Issues such as jurisdictions, governing law, contractual documents, enforcements in different jurisdictions are just some of those issues that you might need to overcome. So this slide introduces a simple four-part framework: know, demand, prove, and apply. So the first step is to know. Before you start doing business with a new client, a new customer, you need to know exactly who you are contracting with. What that means is you need to know their full legal name, the entity status, their registration details, and whether the person placing the order has authority from the company. The second step is demand. Payment terms should be clear, reminders should be timely, and overdue invoices should be followed up in a structured way. A business should know when a courtesy reminder becomes a formal demand and when a formal demand becomes escalation. Step three is to prove. Recovery is always stronger when the paperwork is strong. So things like contracts, agreements, terms, purchase orders, invoices, delivery evidence, and acceptance emails all help reduce disputes further down the line. And the fourth step is to apply. This means thinking clearly about jurisdiction, enforcement routes, and local process. So for UK and GCC matters, this is particularly important because the recovery strategy may differ depending on where the debtor is based and where the assets are located. Now, this is a very, very key, important slide. Um, Sales teams are so in tune to bringing on new customers, new clients, and it's usually the finance departments or the CFOs, etc., that then need to deal with whom they've been contracting with when invoices become unpaid. Now, the first practical question is, do you know the legal entity behind the transaction? This sounds basic, but it's one of the most common sources of difficulty in debt recovery. Businesses often deal with a brand name, a trading name, a website, or an individual contact, but the legal claim must be directed to the correct legal entity. So before accepting an order, ask for the full legal name. That's not just a trading name. Confirm whether you are dealing with a company, a partnership, a sole trader, or an overseas entity. Get the company registration number or the local equivalent. So authority is also key. Is the person that you're dealing with authorized to bind the company? Are they able to bind the company into a contract or agreement? Are they the correct buyer or signatory? Have you kept a record of that authority? So documentation is also key. The key message here is legal identity matters more than the brand name itself. So this is slide 5. Second step is timing. So we often see that customers or clients of ours will delay the escalation of demanding payment. So though that delay can weaken cash flow, reduce recovery options, and certainly in my experience, a late invoice or an unpaid invoice shouldn't sit untouched for weeks or months simply because the relationship feels sensitive. That doesn't mean being aggressive. It means being clear, fair, professional, and consistent. So what we tend to advise our clients is before the due date, you send a simple courtesy reminder. That can usually be very effective. It means that it confirms the payment route, reduces the chances of administrative delay, gives the customer an opportunity to raise any genuine issues early. Then we suggest a due date +1. That should be the first overdue notice that's sent to your customer. This is to also check whether there's any disputes. If the debtor has a problem, you can ask them to set this out clearly and provide details. If a payment isn't made, then the next stage is a formal demand. This should refer to the invoice amount, interest, and any contractual charges which are applicable, and also provide a clear deadline for payment. If that deadline then passes, then escalation should be considered. This may involve a recovery partner such as Collect B2B, a legal assessment, or more of a jurisdiction-specific strategy. In principle, the earlier you act, the more options you tend to have. If you're dealing with a customer that owes you money, you'd rather be first in the queue than further down, just because you've extended that period of credit. So this is the next slide. So this slide emphasizes the importance of documentation. Evidence reduces arguments, delays, and costs. It's not simply a question of are we owed money. The question should be, can we prove that we are owed the money by the correct debtor under the correct terms? So the first category is commercial documents. This is usually a contract or an agreement with signed terms and conditions, purchase orders, written instructions, and the invoices themselves. Together, this pack of documents helps show what was agreed, who agreed it, and the amount that becomes payable. So the middle section here, delivery and acceptance. For goods, that might include a proof of delivery, delivery notes, serial numbers, or batch references. For services, it may include completion certificates, acceptance emails, or project sign-offs, or evidence that the services have been delivered correctly. And lastly, you've got the debtor acknowledgements. These can be extremely valuable. Primarily because it creates a paper trail between the parties. So a debtor may acknowledge the email, the debt in an email, make a part payment, or make a promise to pay. These are all valuable implied admissions that the debt is due by them to the client. So it's important to keep your record keeping clear, make demands for payment clear, and ensure that you've got the right evidence to win the arguments and therefore supports faster escalation should that be required. So this is a very important term that's often missing from contracts and agreements, and it refers to retention of title. So this can be useful where pre-default it provides pre-default protection in goods transactions. So what that means is the retention of title clause can state that the ownership of the goods remains with the seller until payment in full has been made. So what that means in practical terms is that the seller is given additional leverage if the goods have been delivered but remain unpaid. There are some limitations to retention of title, so it's not an automatic protection. It needs to be drafted within the contract or agreement, and it needs to be incorporated before the supply of those goods. Something else you need to have a look at is whether it's enforceable in the relevant jurisdiction. So there's three practical points here. Firstly, incorporate it clearly within your agreement. The clause should be accepted in accepted terms before the sale, not introduced afterwards. Secondly, track the goods. If you want to rely on a retention of title clause, you need to be able to identify the goods. That means keeping serial numbers, batch references, delivery notes, stock location, etc. And thirdly, check for local enforceability. The treatment of retention of title can differ by jurisdiction. For GCC matters in particular, local advice should be taken before relying on the clause. The key point to take away from this is retention of title can be useful, but it's not a substitute for due diligence, clear credit checks, or prompt escalation. I think that brings me on to the last slide. So the key takeaways. So to bring this all together, the overall message is that debt recovery is stronger when it's built into the way that you do business. There are 5 key takeaways. The first is you need to know who your debtor is. So you need to make sure you know the legal identity behind the transaction, not just the brand, the website, or the trading name. Secondly, you act on time. So demands for payment should be made promptly and professionally. Early action protects your cash flow and gives you more options. Thirdly, you need to prove the debt. Keep the documents and evidence that show what was agreed, show what was delivered, and what was accepted, and what remains unpaid. Fourthly, you need to protect ownership where appropriate. This is where retention of title can be useful for goods, but only where it's been properly drafted, incorporated, and enforceable. And lastly, we've got thinking about cross-border transactions or issues early. Jurisdiction, enforceability, and local processes should not be afterthoughts, particularly where the debtor or your assets are overseas. That's where businesses can move from reacting to unpaid invoices to actively reducing recovery risk from the outset. That's the end of my part of the presentation. I want to say thank you for listening. There will be an opportunity to ask questions following the presentation from my friend Ayman from AW Holdings.
Ayman, if I can introduce you a second. But first, I'd like to say thank you very much to Sonny for a very comprehensive presentation. It covered a lot of key, not just legal, but common sense points that everybody should try to adhere to. Commerce isn't a game. It's a contractual relationship that you have with people, and you need to understand how contracts work. But if you don't, a very first point of contact should be to contact your local Chamber of Commerce and ask for help. We can help you contact people like Sonny. We offer an arbitration service as well. And we have the wonderful international links going overseas into the countries where your international clients live, work, and operate. And on that note, it's again my great honor to have with us today Ayman Alwadi from Alwadi Holdings. Congratulations on joining us today from Dubai. I'd like to hand over the podium, as it were, to yourself for your presentation. Thank you very much.
السلام عليكم ورحمة الله وبركاته. صبحكم الله بالخير والنور والسرور والسعادة. Good morning and good afternoon and good evening, everyone in his time zone. Thank you, Alan, and thank you, Sonny. Thank you, and a big thank you for all the members. They decided this morning to put a valuable time to invest with us today and to learn more about not only the domestic side of the story, London and the UK, but abroad as well. How much money is important in our personal life, in our business, in our corporate, in our professional? It is very much important. The money means credit, how much the credit is important. In fact, as Alan said, sometime you for a small transaction cash, but I'm not seeing this cash anymore. I'm seeing actually credit and credit, and credit is always there. And whenever there's a credit, there is a risk on that credit side. There is no business transaction so far I can remember that there is cash on it. And as such, today for investors, for entrepreneurs decide to go cross-border, for exporters and traders, for SMEs. This is a very much important thing, as Alan said. You invest, but what after the investment? The world is not London, neither Dubai. Today we are sitting here on an online platform and we do business together. It is bigger than the jurisdiction we are in. The business transaction has no visa to take. Transactions, business. being in Dubai, the business hub in the MENA and the Middle East and the GCC, directly or indirectly, 24/7 happening. We know what type of going on challenges all the professionals attending today, or they will be listening to this. The challenges, it is part of our life. The financial side of it, if we look at the historical challenges in the economies, global economies, we talk about cost of fund, interest rate, cost of energy, inflations, AI. I will not talk about Hormuz Strait. It is one of these challenges. And these type of challenges, not the first, not the last. In the almost 30 years I spent in this industry, I believe most of what I witnessed, that the debtors in first place used to be creditors. There is no one or an entity born as a debtor. They been in first place given a credit, and then the risk not measured in the way and the action. So today we will be very much in need to talk how to remain a creditor and not to flip in a way or other, or a short, medium, long term to be a debtor, which is a disclaimer: the debtors, they are not criminals unless they are. And there are countries in the financial history, we heard that they became bankrupt, and it is something happening to any business. So it will be my pleasure today to talk about how to remain creditor, not to be a debtor. A way of introduction. My name is Ayman Alwadi, Group Executive Chairman of AW Holding. A simple, humble story started 30 years back almost, from Dubai to Abu Dhabi, to Saudi Arabia, to Oman, to Qatar, and to Egypt, the gate of Africa. The 30 years, there is a milestone on that. 17 years back, me and my team decided to go international. And this is what all about. The word is not the United Arab Emirates, not the GCC, not the MENA, not the Middle East. The word is the world. And as such, we took that decision to understand the business interaction between the regions and what type of risk on those. And as such, we had to handle directly and indirectly an operation in 150 countries. Back to the operation we built over the 3 decades. I thought, me and my team, when we'll go to Saudi Arabia, which is some 6-7 hours drive, more or less 1,000 kilometers, I thought it is similar to what we have in the United Arab Emirates. But what I found, no, there is a lot we explored. So this is a bit of who am I and who we are. Back to the point, when we had to go to the region, there was a reason when we had to go to Saudi Arabia, because there are international clients like the members in West London Chamber of Commerce. They want to understand how business goes over there. So we had to get and to go through the learning curve and to understand there is a different business culture over there. When we go to Oman, there is a different type of collections. It is not about to pressurize, but to understand the people you're gonna collect from them. When we get to Qatar, as an example, we had to understand from where you need to source the data and the information, the credit information, because in first place, if you got the right information, you got the right credit, and if you got the right credit, you manage all the other credit risk at that. When we get to Egypt, we came to know how much you need to have a ground of understanding how business goes over there. One key word in this little 30-year journey, always you need a local partner. With whatever knowledge we had where we started in the United Arab Emirates, we had to go to the region and to understand the regulator, the regulations, the legal system, the corporate behavior, the personal. So this is one of the things today, and this is where the bridge between the Chamber of Commerce of West London and B2B collection. So the local partner, it is all about. Once you start thinking to grow and to go out of your jurisdiction. Now, back to the very much important element. The last 6 months, due to many factors, not only Hormuz trade, but many other elements in a global level. So, as a reward to those people invested their time with us, I analyzed what in the past 6 months time had tips to remain creditor and not to go as a debtor. And this is for and as of the learnings of past 6 months, which is an ultimate goal for everyone, even we in collection. So the credit benchmark. The credit benchmark, what I saw, there are a lot of local and international creditors. They work in domestic and across border, but they are not really looking at the credit function benchmark. They keep using the same as if it is a holy book. Credit function, this is the first thing I would advise everyone to look at. So you are a trader, exporter, entrepreneur, you're starting work in other regions, try to revisit your credit benchmark. In what ways? Who you giving the credit? How much you got a right information about the one you guaranteed that credit. Revisit how much the credit you give and the collaterals you got against that credit, if it's enough or not. You need to re-benchmark and to see the duration. If you used to give, as an example, not limited, 180 days, is it suiting the going on conflicts? Is it suiting the going on in you built-in risk in your credit? So the credit benchmark. Number one, if you manage to re-benchmark your credit, so you manage the first element. Second, after you give a credit, of course, you got receivables. Receivables, it is a well-known terminology. And there is a regulation for it, international and sometimes locals, and they're giving us the guidelines. But in these going on circumstances, that I respect those guidelines, but from a personal point of view and a leading in this industry, and for the past 6 months, I believe every trader, exporter, entrepreneur, any investors need to look at the receivable differently. Do not wait the due date. 30 days before the due date, you need to get closer and closer and closer to the one you give that credit for. Of course, I'm not inviting to damage the business relation, but it is really important to get closer to the one got your money. And as such, there are different ways and tools. And I start advising, and I'm seeing this is happening frequently, that different type of reminders even before the due date. So it is a learning curve to your clients. You give the credit that you really need to reconsider that you remind them. So by the time they understand how much serious you are about to collect your receivables, and within the 30 days prior the due date, you would came to know a lot of sometimes surprises, and this is what we are experiencing. Are they paying their salaries, staff salaries? Have they get in default? They still remain in their offices. They downsize. They got claims again at them. So if you manage the first 30 days, even prior the due dates, this is a very much important part. I would advise for whoever, after managing the credit, how to manage better the receivables. Receivables, there is an accounting framework for it. It's not today to talk about it, but practically in 6 months' time, I went through and I would advise that the receivable should be really limited within receivable management within 60 days, right after the due date or right after the default. In my opinion, giving more than 60 days right after the default, this is not a receivable management, it is a collection, a debt collection. So you need really to focus within 30 days. You need to understand a lot of factors. You need to use technology and you need to be close to your client as well. Managing the receivable means you get less risk and default. And as such, now credit benchmark, receivable management, but advanced one, then amicable approach of the debt collection. And my advice, again, out of what files and experience, not only in the United Arab Emirates, in all the places we operate, that a 60 days from the default, this is right after collection. And collection, you need to look at it differently. You need to make it a definite debt. You need to try to obtain collaterals. Then you should start do the collection after checking these 1 and 2. Make it a definite debt and try to obtain collaterals. And with whatever facts arise that the margin of risk come higher, so you don't need to stick with whatever days I'm referring to. So right after the 60 days, I would say normally, if I manage to make it a definite debt, if I manage to get collaterals, if there is a good communication, if there is a track record, if there is no serious risk around, I would give it another 90 days. Because the goal not to crash the business, the goal is to look at it differently within the global different challenges in our cash flow. Amicable is amicable. Amicable, it need an understanding. It's not about to harass. It's not about to shout. It's not about to threat. It is about to lump sum, make it definite debt, paying collaterals. If there is acceptable margin of risk, you can go for an up to 90 days. And if there is any abnormal or unacceptable margin of risk, it is not anymore amicable. I'm referring to the debt collection. And as such, you need immediately to understand you need to take legal actions. Take legal actions means I would tell you stories of SMEs, entrepreneurs, large and XX large corporates dealing in domestic and across border, that they put us in a consultation of what going on, the delays of the payment, the cash flow impact, and we realized that most of the corporates or whatever category I just mentioned, that they don't have even a budget to the legal. So whoever in business need to understand there is a proper budget, and that budget need to be reviewed every quarter to understand, because there is a possibilities out of whatever going on in a global level that the default ratio can go up to 35%, and within what I mentioned, 30 days before the due date, 60 days to do the receivable management, 90 days. So there is some time. It is vary from corporate to corporate that you need really to make sure there is budget. But it is not only budget. You need to have the right partner in success with you, not to get you a judgment only, but to collect after getting the judgment. You need a lawyer partner to understand the shortcut of the process within the frameworks and the compliance. The corporate business lawyer mind to try to do pre-legal and legal. Try to get the partner who should explain to you it is not feasible to go legal. Try to find the lawyer partner where he can advise it is feasible end of whatever investment, or sometime we need to be able to accept the write-off. And you need to find the lawyer where he can share risk with you within the compliance, whatever region you are dealing with. So it is very much increasing for the past 6 months, amicable going to legal, and how much important the corporates need to understand what legal means and to be ready for. Then, as I said earlier, the debtor is not a criminal unless he is a criminal. And I witnessed over the 30 years, directly and indirectly, the story is people travel. Human being, we need to understand. So someone, he's an entrepreneur or he's an employee. You need to understand that if things end up that they couldn't fulfill their financial obligations, it is a right and respected decision to relocate. And I can see it is over the 30 years, and recently more and more, means the last 10 years, that someone, as an example, let us put it in a little story from the UK, trader or exporter dealt with someone in Dubai. Someone in Dubai couldn't fulfill and he relocated. So he relocated to home country. Then a second home country, countries allow second citizenship. Or where is more projects, like as an example, not limited, within the MENA region or in particular the GCC. So there is a percentage of people with skip. And that's why if you manage your credit benchmark, then the receivable differently, then the collection, then the legal collection, you will have very much less debtors already skipped. But it is a fact you're gonna face that there are debtors took your credit and they went off. And this is the reason 17 years back, we start opening more and more operations in the regions where we are in and the global partners, because it used to be when someone disappeared, end of the story and a write-off, but you need to make it is a long-term debt collection. So to this part, you don't need to give up and you need to understand, no, there are tools. So lump sum these things. If you manage, at least for the upcoming 6 months, and out of the experience of the past 6 months, re-benchmark frequently, quarterly, your credit function, then manage your receivable differently and look at your collection completely differently. And the legal, be ready for, it is not a choice, it is something you need to go for, and it is part of the business. And skip tracing, and to understand there are short, medium, long term. This is a humble personal experience I'm sharing with the members of West London Chamber of Commerce. Now, this is how, hopefully, creditor not to become a debtor. I would like to conclude. I experience corporates or entrepreneurs, sometimes they feel ashamed to say that I got such a big amount to collect. It is part of the business, my dear. And you need to accept that fact. And remember, debtors in first place used to be creditors. Thank you very much. I wish these to really add value to the members and to how they would look at least the coming 6 months. But conclusion, there are since a few days a lot of positive movements and news and updates. I'm not a political person and I'm not good in that, but there are a lot of signs tells us that things getting better and sooner. Thank you everyone and Ajni. Thank you.
Shukran Gazilan, Ayman. Thank you very much. What a wonderful, wonderful presentation. I can reflect that you've got a few thumbs up emojis on some of the different things that you were saying in the chat box. They were very, very accurate statements. A few things I'd like to reflect on, first of all. It is very interesting that you said it's important to be higher up on the curve to be paid and not wait too long till you're at the end of the queue. So take action and look to be seen to be taking action quickly. Secondly, it's really important, I can't agree more, to have a local partner in this. Most UK exporters have an agent or distributor in the market to distribute their goods and products. But if you're going to take action against that person, you need to have a local legal contact in that country. Local law is the law that applies. And the key thing is as well, staying up to date with what's going on with your customer. Where your customer used to be trading well 2 years ago when you visited him last might not be the same situation as what it is today. You need to stay up to date with what's going on. But more than that, stay up to date with the issues in the country of what's going on. And be aware that something called force majeure tends to come up occasionally in international trade when things happen inside a country that's beyond anybody's control. Recently, it was highlighted by the British government in the King's speech for coming legislation in this new parliament that, and I quote, small business protections against late payments bill. And the government's introducing an aggressive defence for smaller suppliers facing cash flow bottlenecks. They impose a hard limit of a maximum of 60 days with highly restricted exemptions, including international trade or small business from large scenarios. And they have looked to impose financial penalties and enforce a mandatory interest on late invoices set at 8% above the UK Bank of England interest rate. Now, those are some quite strong words and legislation from a government that realises we are heading into a credit and then moving into a debtor crisis. And so those are key things that the government's trying to do, which helps in turn people like yourselves, because these are acts of law which give you as lawyers protect strength to do things. We've got a few questions which I'd like to read out if I can. The first question, we've got some shared. The first one is, how can amicable collections help to protect brand reputation while still recovering money owed? Who would like to take that, Ayman or Sonny?
I'll take that one. The reason why I'll take that is at Collect B2B, as I said at the start, we act for small clients, small businesses, SMEs, but we also act for some very, very large businesses who provide us with lots of work, and the one of the key parts of using Collect B2B is that we collect with brand reputation in mind. So collecting a small debt may cause more damage to a business's reputation than it's actually worth. So we use evidence-based collections. So none of our letters are automated. I know that lots of other debt collection agencies rely heavily on automation. We write very clear letters. It's all evidence-based, and we have constructive arguments or engagement with our customers. And I think if they know that there's someone who's able to articulate why a debt is due, and rely on written terms and conditions, then it enables them to make a more straightforward decision in terms of whether this is going to continue to be disputed. So, so the key emphasis is to act fairly, act commercially. The aim is to recover what's owed, protect brand reputation, and preserve relationships, because ultimately you may want to continue that commercial relationship with that customer. So yeah, hopefully that answers that question.
Ayman, yes.
Indeed, Sonny, and I would like just to put our journey experience. The collector, first of all, we got like a learning center for collectors, because we got different update and different reactions in different regions. So we need to get all these, and we need to understand it as a management. Then we need to do training for them.
Mm-hmm.
So what actually the years of experience tell us something really very much tally with what you mentioned. So understand the reason of default. So the collector has a duty to understand the reason of default and to understand the market situation, the debtor situation, the willingness, and to come up with a practical set of solution with a balanced between all these elements, and sometime to educate the client that this can be done, this cannot be done. Back to the question, as much as there is acceptable margin of risk, all these dialogue, I will not say it, call it more than a dialogue, would work. But if there is unacceptable margin of risk, he is not your client anymore. This is what the T-junction between that holding the business, which is very important, and to see the cost of default and to what extent that risk is acceptable or not. Thank you.
And I noted in one of your slides, Ayman, you start off with an amicable approach to resolving a debt, and then that progresses a bit further. So to ask one of the questions that's come in from our audience, what are your views on companies using AI in debt collection? Sorry to ask this from a human audience.
No, I don't know if Sonny would like to take it. Otherwise, I would just put my opinion on it.
Ayman, over to you. Yeah.
Fine. AI, it is the new word. We cannot live without the AI. AI is something we need to believe on, and we need to understand it is endless journey, and we need to understand it's going to get to the industry for the B2B and B2C. For the B2C, the AI is bit in, I cannot say advanced, but in serious achievement of the goals of the debt collection process. For the B2B and the corporate world, it has, but it is not like the B2C. It's gonna one day happen, but it will not replace the human debt collectors. It can help the collectors and the agencies like us to do a better collection, faster collection, understanding the behavior, understanding the trending, and come up with more set of solutions. So it is part, and we taken this in a very much consideration in AW Holding but in milestone, and we need to be really careful about the compliance, the privacy of the people, and all of it. But it is very much important, and it is a part, and we need to live, and we need to love, and we need to make it in favor of the debtor and the creditor and the debt collection agency, because it's end of the day economy, and whatever good for the economy is good for all of us. This is about the AI.
Wonderful, thank you. So the next question is a question I'll answer, but I'll throw it up because it's been asked. Is a foreign citizen or company allowed to establish a company that deals in real estate and investments without partnering with a local company or citizen? The answer to that question is really depends which country you're dealing in. It's all about the local laws of that country. Some countries in especially Africa, but across the Middle East, you're not allowed to own property if you're a foreign company or a foreign person. However, I have noted that a foreign company is allowed, or a foreign person is allowed to own a local company, and if the local company buys a property, then that works because it's a local company buying it, even if it's foreign owned. But it depends on the country you're dealing in. The next question is, if I don't have a budget for legal, what do I do? Although I prefer the legal approach. And that's a very good question because it cuts to the heart of what we're trying to deal with here.
You need to ask someone, Alan.
Well, we'll start off with yourself, Sonny, because Ayman answered the last one.
Okay, not a problem. So it, so I'm a qualified solicitor as well as running Collect B2B. So the two approaches are very, very different. In my experience, corporate clients are usually put off by going legal because of the hourly rates that are charged by the lawyers. Now, ultimately, if there isn't an amicable resolution, then there needs to be an escalation to legal. But the benefits of using amicable collections is that certainly in the UK, many debt collection agencies will work on a no collection, no fee basis. So what that means in short is we can take a ledger or a credit control matter and work on it. And if it's not collected by our team, then of course there's no charge to the client. And that's a massive safety net. It's almost a no-brainer insofar as you know that if somebody's going to try and collect on your behalf and that they're unsuccessful, then there's no bill, which is unlike what you get with lawyers. The lawyers will charge their hourly rates or their fixed fees regardless. So there are benefits of using a debt collection agency in the first instance for amicable collections, but certainly here, because we've with my legal experience, we can usually risk assess that at the front end by saying, have you got the documentation in place? Have you got acknowledgements from the customer? And then deal with anything that might come on the landscape further down the line. So hopefully that kind of answers the questions in terms of legal. But ultimately, legal is litigation. One of the things that they teach you at law school is always a last resort. So you need to have exhausted the amicable collections, unless, of course, something is time sensitive.
Ayman, if you forgive me, I'll quickly answer that question on your and Sonny's behalf in a slightly better way, as far as I'm concerned. We all work for a living, and we all have to put money on the table to pay for food in our own households. a quick call and discussion with somebody like Sonny and or Ayman will give you a quick answer as to whether your debt is possible to be collected upon. Dependent on the complexity of collecting it might involve an increasing amount of cost, but costs tend to be proportionate to the amount of money you're trying to collect. I think we've got a few extra questions and we're already over our time limit. So I'd like to quickly run into another one. What makes Collect B2B different from simply sending a standard debt collection letter? That's definitely one for you, Sonny.
Yeah, it also kind of blends in with the AI question, I suppose. Uh, we're aware that automation and AI is where a lot of businesses are going. We're we're um we're a little bit more traditional than that. I think whilst we incorporate AI into some of what we do, it's still a very much methodical approach. As I said earlier, everything's evidence based. So we like to know what the reason for the non-payment is. I'm sure Ayman will agree that there'll be phrases like the can't payers and the won't payers. It's about establishing why your customer isn't paying. Have they had a change of circumstances? Are they going through personal changes within the business? And that just means that you're going into the collections process with your eyes wide open. So we don't send standard inflammatory debt collection letters. Everything's bespoke, tailored towards the client's needs, and specific to the customer.
Okay. Eamon, there's one last question that's got your name written all over it, I'm afraid. It says, what if my debtors flew to other countries outside the MENA region where they would have had the goods and where they would have had the invoice sent to? How far does your reach spread?
Um, we are very much humble. We started not from the zero, from the scratch or the minus. We learned hard way. And when we expanded directly and indirectly 150 countries, it is on demand. So we serving well the GCC and the Middle East and the MENA clients where they got issues out of our regions. And this is goes within compliance, within GDPR, within association, and we are partner for at least like not less than 15 to 20 years with the top worldwide names in it. And in the other side of this planet, whenever they got anything within ours, we invested heavily to be one and only one, and with a motto and a promise: if we cannot collect, should no one be able to collect.
Fantastic, thank you. So, gentlemen, Ayman, together with all of your team, Abdullah and Rana, and anybody else that I've missed off here, thank you very, very much for today's presentations. Sonny, thank you very much for your linking us together with Ayman and your presentations today. Um, this webinar is going to be available on our YouTube channel and advertised going forward for people to see, watch, hear, and listen to and learn from. And we hope that this brings some business for yourselves. And we hope that this brings settlement of debt owed to some of our exporting and trading local members. Thank you very much for your time today. Shukran Gazilan. Ma salama.
Thank you. مع السلامة.
Thank you, Alan. Thank you, Ayman.
Thank
Thank
you,
you.
Sonny.
Bye bye.
Bye-bye.